traders. I believe we are doing good. How has our trading been? This video, I want to teach you how to become a complete trader, how to become a true professional trader. I want to teach you how you will be analyzing the market with confidence. When I mean how to analyze the market with confidence, it means that you already know the direction of the market even before the move happened. It means that you have analyzed the market to such an extent that you are able to determine the next wave and when it's and the right time to enter such trade. I want to show you what professionals are doing that you are not doing, guys. And I want to show you why you are trading is as if it's not working. Why you are trading anytime you hit profit, it's as if you had luck. And anytime you enter a trade and it immediately goes against you, it's as if somebody is following you, somebody is monitoring you. Some people will say it's like there is a winch following them from somewhere. Some will say it's as if there is a bad luck that is following them. It's not true, guys. What the problem is lack of information. What the problem is lack of knowledge. Okay, when you don't do your background check, when you don't do your background analysis before you jump into technical analysis, you are going to run into trouble. I keep saying, guys, you cannot run away from fundamental analysis. Technical analysis cannot drive itself. Technical analysis is just a replication of what is happening in the realm of the fundamental. That is, it is the fundamental that determines the direction of the market. And whatever is happening in the realm of the fundamental is displayed in the form of a chart that we are seeing on the trading view or your MT4. So the earlier you understand how to do chart analysis, how to do fundamental analysis, the better for you guys. I was once in your shoe where, despite the fact that I had a degree or I was a student of economics and I knew as I was in a position to know better, I was not applying fundamental in my trade. I just jump into the chart and I begin to analyze the technical, okay? But then you will just be entering the market anyhow, you won't have a choice. When you see a candle going up, you buy. When you see another one coming down, you sell. And before you know what's going on, before the end of the day, before the end of the week, you have taken more than 50 trades, more than 70 trades. You can't be profitable like this, guys. Friend, you can't be profitable like this. You know me in my channel. I always try my best to show you what works and what does not work. Now, I'm taking it a step further by showing you what the professionals are doing that you are not doing, what the professionals are seeing that you are not seeing, so that if I'm able to expose this to you, probably if you listen to me, you have a change of mind. And if you have a change of mind and you want to take your trading career serious, then you follow what the professionals are doing. Of course, as we do it, we are going to use CAD CHF as a case study. CAD CHF as a case study to analyze from beginning to the end how professionals are looking at the market. We are going to x-ray the fundamental point of view on CAD CHF by looking at the fundamentals of each of the currency Of course, you know, CAD CHF is a currency pair. All right. So each of the currency in the pair, which are CAD and CHF, we are going to look at economic fundamental that drive CAD and the economic fundamental that drive CHF. So when we understand that of CAD, the economic fundamental that drive CAD and the economic fundamental that drive CHF, we will now juxtapose the two. We look at the two, we compare the two and see the one that should strengthen and the one that should weaken. So if we have decided this using fundamental analysis, it means that we have concluded on our directional bias. So the next thing to do, guys, will be to go back to the technical chart and look for, patterns that reflect that, or setup that reflect the fundamental direction that we have decided on the basis of the fundamental analysis. Is that okay, guys? So let's go and start. You know, as we do it, we push the chart away. You don't want this. You want to analyze the market based on fundamental analysis. That is the background work, guys, that we first put into trading. We don't just jump into the chart. That is why when we tell you that this market, this particular instrument is going to go up at social level, it will go up. When we say social market is going to go down at social level, it is going to go down. We trade with confidence. And the reason why the confidence is there is because a lot of research has gone into it. We have done the background check. We have checked the respective economy. You know, we have checked what is going on. We have checked the basic macroeconomies of that country. And based on that, we're able to take our directional bias. We are able to take our directional bias. Do you get it now, guys? So let's look at economic fundamental of CAD CHF. Okay. So in doing this, I'm going to introduce to you, a particular website, and there we're going to look at all the economic fundamentals of CAD. Okay, the important one that will help us, and we'll look at that of CHF. Okay, we're going to pay particular attention to interest rates, inflation, GDP figures. These are just the few we're going to be interested in. These are the few we're going to be interested in, guys. So first and foremost, let's go to CAD. Okay, so I would like us to go to a website called Trading Economics. Trading Economics. TradingEconomics.com. TradingEconomics.com. Yes, we're now in TradingEconomics.com, guys. Okay, we're now in TradingEconomics.com. You go to indicator. No market, go to currency. Okay. Now you go to indicator. Then we want to first look at CAD, guys. We want to first and foremost look at CAD. You go to Canada. This is Canada. Click Canada, guys. Okay. Every data as it concerns Canada is going to be under this page. All right. And if you look at the date, don't make mistake by going to 2021 and so on and so forth. We are interested in 2022 data, guys. All right, we're interested in 2022 data. So, and I told you we're going to be looking at the GDP. We look at the stock market, Look at the currency, is the price in relation to dollar. Look at stock markets. See, this is the capitalization. This is the point. This is 20,791. Now it's 20,890. That's an improvement. GDP growth, guys, it was 1.6 before. Now it's 0.8. It's slowing down. It's still positive. GDP annual growth rate, guys, was 3.2. Now 2.9. It's still positive, but it's declining a little. The GDP growth annualized, this unemployment, all these ones, I'm not too concerned about them. I'm concerned about unemployment rate. It used to be 5.3, but it's now dropping. It means that within the year under review, more people were employed, or within the month, more people were employed. So that's why unemployment rate dropped. Okay. Then I'm also concerned about this inflation rate. It used to be 6.7, guys, but now inflation has increased to 6.8. It was just a marginal increase, guys, just a marginal increase. But then there's increase in inflation. Now, if you look at this one, inflation rate month on month, okay, it means within a period of 1 month, inflation actually dropped from 1.4% to 0.6%. Okay, so this is annual inflation rate. It increased marginally, but this is month on month. It dropped, okay, substantially. Okay, but then when they have to look at inflation, they are not just looking at a month on month, because it can drop this month and by next month it can increase. So this inflation rate, this annual one, is very, very important, very key, to us. Okay, and you can also see that interest rate was 1% previously in June 2022. Now it's now 1.5. Okay, it's going to be 1.5. That's the last one. This is previous 1%, now 1.5%. You get now 1.5%. We're going to maintain this until June, which is this month, guys. 1.5%. Can you see? I want you to note this key, fundamental, like the interest rate. Okay. Also note the balance of trade, guys. It used to be 3,081. But now that is you can see it's a million. Okay, card a million. Okay, now it's 2,486. Not too good, not too good a number. But look at the current account, guys. Look at the current account, minus 137 here previous. Look at it now, positive, big number, 5,026. Can you see? So look at government debt to GDP, guys. Used to be 86.8% percent of GDP, but look at it now, guys, 118% of GDP. This is bad. Oh, this 2020, guys. Let's leave all this area. This 2020. So what I want you to check right now is the interest rate, 1.6, 1.5%. Okay, 1.5%. Trade balance is positive. I also want you to look at government budget. Can we get government budget for 2022? Government budget for 2022. We get it. Oh, well, let's do 2021. Look at government budget. Government budget. Look at the deficit. It used to be minus 14.9% of GDP. Now minus 4.7% of GDP. Can you see? Percent, yes. Okay, it used to be terrible, but now it's better. The number is better. Can you see now? So I want you to take note of inflation rate and interest rate, particularly interest rate, 1.5%, guys. That is the last. Previous was 1%. Now it's 1.5%. So can we see that Canada economy is fairly good, right? It's fairly good. Okay, and This increase in interest rate is going to make cost of borrowing be higher than expected. And of course, the implication is that there is possibility that the stock market is going to go down. All right, the stock market is going to go down because you are uh, the cost of borrowing is higher. So investment in companies will drop, and if investment in companies drop, there's high tendency that they're not going to perform well. They're not going to declare much profit, and as a result, capital market will go down. All right, capital market will go down. Do you see that? Okay, so but at any rate, because of this increase in interest rate, people are going to be, trying to invest in a card, because if you have your money to deposit, you are going to earn a better interest for your card. I'm going to earn a better interest. And remember, we are trying to compare card with CHF. So well, by the time we get to CHF and you see the interest rate, you will see that you would like to sell off your CHF to buy your card. You want to buy your card because it promises a better interest. All right. So guys, let's check CHF. See, this is what professionals are doing, guys, that you are not doing. That's why it's difficult for you to make money, guys. It's at the background check. That's Switzerland. Click Switzerland. Okay, it's why we make a forecast, and it happens exactly as we do. These are things that we do, guys, that you don't do. Can you see? Let's go straight to inflation, interest rate, guys. Can you see? The interest rate for Switzerland, guys, was minus 0.75. And then when they were supposed to increase it in order to tame inflation, they did not. What did they do? They made it to remain the same, minus 0.75. Can you see? Interest rate is negative. What it means is that in Switzerland, if you deposit your money in the bank, the money is going to be dropping. You are not going to receive interest on your money. You are rather going to pay the bank for keeping the money for you. So what do they want? They want people to go out and invest. Cost of borrowing is so cheap. In Switzerland right now, you borrow money, you pay no interest. You borrow money for investment, you pay no interest. That is what they do. But I want you to check inflation. Can you see? Inflation increased from 2.5% to 2.9%. So now, despite increase in inflation figure for Switzerland, they did not increase their interest rates to bring down the inflation. Of course, when there's inflation, the value of currency drop. Okay, the value of your currency will drop. Your currency is not going to have value. All right. So what they can do, and of course, there's general increase in price level, and what they can do to reduce that increase in price level is to increase, interest rates, because a lot of people have money to spend. That is why there is increase in prices of goods and services. So if they increase interest rate, people are going to be keeping this money in the bank. People that were borrowing money in the bank to invest in real estate, invest in capital market, they are going to find it hard to borrow money to do such investment because of the increase in the cost of borrowing, interest rates. But this economy refused, the Swiss National Bank refused to increase the rate. They left it as negative 0.75. Can you see in the case of card, guys? In the case of card, right? Card has interest rate of 1.5, and then CHF, guys, has interest rate of what? Minus 0.75. This has, completely given us a direction in this market. All right, this has completely given us a direction. But let me tell you something, guys. Let me tell you something. I want you to check something. Check something, guys. Let's check trade balance. Look at it. The trade balance for Switzerland was previously 1,836 million CHF. But look at the trade balance now, guys. 3,843. The trade balance is doubled. So that is why many people are becoming confused that CHF is having a negative interest rate, and yet we still call it a safe haven asset. People are still buying it. Why are people still buying CHF to keep despite negative interest rates? The reason why they are doing it is because Switzerland has a stable economy. They have a positive balance of payment. The balance of trade is positive. Why? What do they mean by this balance of trade? Can you see? The total export for Switzerland is ×2, is double of its import. It means that Switzerland is able to produce what it needs and is exporting the excess to the outside world. That is why the balance of trade is double, is positive. Can you see now, guys? So, but based on the information on the interest rate, we are seeing, look at inflation is increasing from 0.4 to 0.7, from 2.5 to 2.9. They are supposed to increase rates, but they left it the same and it's negative. So if you compare these two, you will see that if you are asked which one will you buy, if you keep CAD in the bank and they are giving you 1.5% interest rate, and you keep CHF and they are giving you negative, they are even removing, they are debiting your account for keeping CHF in the bank. Which one will you keep in the bank, guys? Which one will you buy? You are going to be buying the card. I think my guess is just the same with yours. You are going to be buying card, guys, and you are going to be selling off your CHF in order to buy card. So based on fundamental analysis, guys, our card is projected to go up against CHF to come down. Okay, from the analysis we have gotten from trading economics. Okay, so that is the first phase of our analysis. That is the background check that, you know, investors want to look at. This is what they want to look at, guys. And that is what you are not looking at. You're not looking at this. Do you get now? Okay. So having gotten this illustration, we now move to the chart. We are done. We are now looking. We're now going to go to the chart, and we now start top-down analysis, guys, from higher time frame to lower time frame. Okay, we're going to start top-down analysis. We analyze from higher time frame to lower time frame, and we are going to be looking for buy opportunity of CAD CHF. Okay, so now let's go to CAD CHF, guys. CAD CHF. Okay. Okay, CAD CHF. We are there. So let's clean up. Let's delete. Let's delete. Let's delete. All these ones, guys. Let's delete all these ones, guys. Okay. This one, we have to delete this. Clear all drawings. Yes. Okay. So in doing the technical analysis for CAD CHF, we want to start from the monthly. If we start from the monthly, I want you to check this particular provider, Canada dollar, Canadian dollar, Swiss franc. I want you to check IDC. IDC gives a better information than other ones. Can you see? You see a better information right here. So you don't need to be told, guys, before you see that you are right at the bottom of CAD CHF on a monthly time frame. You are right at the bottom of CAD CHF. Okay, we don't even need to analyze all this one, guys. We don't need to analyze it. If you cannot get the analysis, just come and look. Come and look at where you are. Are you in the middle? Are you in the middle? Are you at the bottom? Are you at the top? So if in the monthly time frame, if you are at the top, you are in the supply. If you are in the middle, you have to watch out smaller time frame in order to get a perfect buy setup before you can take the trade. If you are at the bottom, good for us. It's good for us, guys. We are at the bottom of the chart. So here, guys, you are demand area, you are in the middle, you are in the supply area upside here. Can you see? This is how you divide the chart. Divide it into three. You have there is greater probability of your trade not doing well at the middle. There is greater probability of you doing super well at the top. There is a greater probability of you doing super well at the bottom. Do you get it now, guys? So that's the first thing you look at. In a monthly time frame, you look at the structure, how the structure are developing. You see that after this move to the downside, guys, on this monthly time frame, after this last push downside, after this last push, you have this, you have this, you have this three-wave structure, guys. Up, three-wave structure, down. All right, what are you looking for, guys? You can see that I'm not cutting this small little wave as part of it because I need this degree. Can you see this degree now from here to here, guys, is equivalent to all this degree I've been cutting. This is wave balancing, guys. This is how you consider size. Consider the sizes of the wave. All right. One of my students asked me this particular question in the group. How do I cut the wave? You don't need to cut this little one. You have to cut it up because it's of the same size with the other one. And you see the correction here, you see the push. So you want this push to break this top, guys. Let's break this top and come to this area. So we still have more upside to go as far as monthly time frame of CAD CHF is concerned. We want it to hit around 82 before any reaction, any major reaction. Okay, before you can see reaction like this, guys, reaction like this, guys. Before you can see reaction like this, guys, we want this pair to hit 82 so that you have this structure 1, 2, and 3. Okay, so that we have 1, 2, and 3. These three should break this top. Okay, to break this top. It's not a must for you to break that top because here it's even going to break that top because this one did not come to this low. Okay, if this one had come to this low here, then and it's at the same level, then we can expect that we will have the same level here to make a flat, a regular flat, and break down. But in this scenario, this particular level is above this level. So we will have 3, 3, 1, 2, and 3. It has to break the top because this one did not break the low. It has to break the top. And if this one broke the low, it can also still break the top to form expanding flat. Is that okay now, guys? Okay, so that is the bias on monthly time frame is upside. Let's go to weekly time frame. The bias is upside. Now, when you now get to weekly time frame, guys, you are not concerned with all these things that's happening here. You have to concentrate on the wave here, guys. You know, you are targeting 82. So you have to look at how the pattern is developing and the roadmap to getting you to 82. All right. So we have already seen a trade setup here that we have missed, guy, after this push to the upside. push. After this push to the upside, guys, we have had 1, 2, and 3. Okay, and then this is a flat corrective structure, guys, and you have a push to the upside. But you see, guys, that we are pursuing 82. That's about 500 pips to the upside. So what we need to do here, guys, is to look at corrective structure that we are going to get here. I'm going to get a corrective structure here that will push us to that level. Okay, I'm going to get a corrective structure that will push us to that level. Lest I forget, guys, I forgot to tell you that the influence of oil, okay, is also showing on the value of CAD, because right now crude oil is very bullish. So, and you know, Canada, you know, store their reserve in form of crude. So, and they are one of the world largest exporter of crude oil, and of course, they are major trading partner. You know, the major countries, the countries they export their oil to United States, Australia, and Japan. These are the 3 highest top countries that take, you know, that import crude oil from Canada. Do you understand? That is why the CAD JPY is very volatile. When oil is increasing in price, go and check your CAD JPY is going to be very volatile, because at that moment, at that point in time, Canada is making a lot of money off the Japanese, because they are exporting their crude oil to Japan, and Japan is paying them. And because the price of crude is high, it means that Canada will be benefiting more from that deal than Japan. Can you see now, guys? So let's move on. So at this stage now, we have seen this move to the downside. We have seen this move. We would like to see this move come back. Okay, come back before it will push to the upside. That's what we need on the weekly. Then let's go to daily. See, on the daily, it's very bullish. Can you see the level I said we wanted to get to? It has not gotten there. When you are seeing a market and it's giving a sharp down, no correction, a sharp up, no correction, just be careful. Don't take action on that trade. When it now gives the 3rd sharp down, okay, this is now when you have a corrective structure. Okay, when this move down happens, it is called an impulse. So you have no trade, guys. When this sharp up happen, you have another impulse. You have no trade, guys. But if another sharp down happen like this, you have another impulse again. So it means that you have impulse, 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 and impulse, impulse, impulse becomes a 3-wave structure. This 3-wave structure has become a corrective structure. So even though you are having impulse, 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 it has become what? A corrective structure. And if you drop this to a lower time frame, you will see that what you have in the middle is not an impulse. It's a 3-wave corrective structure, which we are going to be seeing when we drop it to lower time frame. Do you get now, guys? So this market, we want it to come and break this top and then come down. When US oil, guys, is going down, we have projected it to go down, then CAD CHF is going to go down to correct this structure, to bring out this structure here that will push us to the upside to 82. Are you now seeing how I am relating the factors that will affect the movement of CAD CHF? I'm relating it, I'm bringing in some, you know, some other financial instruments that will affect or that will influence the pattern it's going to create. So I'm already seeing the pattern that will be created here. Now let's go to US oil. Can you see US oil? Can you see? I'm expecting this US oil to break down at a time, break down to this level before it begin to go up again. So when this US oil is breaking down, guys, because this structure must break down. It must have to break down. When this breakdown is happening, guys, what happens? If US oil is going down, okay, if US oil is going down, it then means that Canada, that rely mostly on oil, okay, that is one of the largest exporter of oil. It means that their revenue on oil will drop. And if their revenue on oil drops, then the value of CAD will drop. And if the value of CAD is dropping, that is when CAD CHF is going to come down to complete this structure. Let me show you guys to complete this structure. This structure, I told you if it comes up here, I expect it to come down here. Okay, when US oil is coming down, CAD CHF will come down, because as US oil is coming down, CAD is weakening. So, but as soon as this structure is made, then you resume the upside in CAD CHF. Don't forget that you can also have, let's go to 4 hours. Can you see that this market is not entirely bullish? Can you see there's a slowdown here? That's why I told you that when you go to smaller time frame, you will see that this middle here is not an impulse, it's a corrective structure. So this is a move down, it's an impulse in 3 waves. You would like, after it break this top, or you may not break it, but get to the top, you would like to see this move down. Okay, so this will be A, this will be B, and this will be C, guys. Can you see? A, B, and C. So when this is done, guys, we are going to be taking the pair right from at this level and they move to the upside. So, but you can you see now why we don't jump into trade anyhow? We don't jump into trade anyhow. There are some of you who will see this pair now and you say, this is a buy. You say, you're going to buy this pair because it's bullish. You're going to buy this pair right here. If you are going to buy, what happened to you here? What happened to this level? Why didn't you buy here? So because it's going at this level, and because we have an impulse here, okay, we know it is wave A, and we don't tamper with wave B, guys. We don't do anything on wave B because we know wave B is slow and very corrective. So if you look at it very well, you notice that this one, guys, is sharper. Hold on, guys. You notice that this wave here is sharper than this one. This one take more time to move up than this one fell sharp to the downside. So because this one was able to fall sharp to the downside, this is wave A, it's an impulse. Because I told you every wave A is equal to an impulse, it's very fast and sharp. Okay, and every wave B is equal to correction because it's very slow and sluggish, and usually in 3 waves, 3-wave structure, and every wave C is equal to an impulse, very sharp too. So what's going to happen is that this is wave A, this is wave B, very slow, and we are once we get to the top here, peak supply here, we're expecting this wave C to be very sharp to break this low. If this break this top, we expect this one to break this low. And that is where we are going to be taking action, guys, on this pair. Okay, if, watch me, if this market consolidates here and break like this, I'm going to be selling this one to the downside. It's going to be a very sweet, sell off. Why? Because I know that this market cannot continue to go to the upside like this, because this cannot be taken as a correction. This your pullback here cannot be taken as a valid correction to push this market to the upside. It look impulsive in nature, in form. You look at it, it look impulsive. So therefore, we must have a correction in 3 waves. So if at resistance here, you're having this consolidation and you have a true up, I will catch it at 79 here, guys, and sell it to the downside, sell it to this area. So once I get here, I take my profit, and in that case, 3-wave structure is over, and from here, I take a buy opportunity to the upside. Where is the target from 74, guys? 82. That is 800 pips. 800 pips to the upside, because remember, on monthly time frame, we have checked and we have seen that for the structure to be complete, we need to get to what? 0.82, guys. So when you are here, you are purely at demand level, and if you are taking it at 74, that is good for you, guys. That is extremely good for you. Do you see it now? All right. So can you see? I'm picking it one after the other, picking it one at a time. At this level, guys, I could buy this because I knew that we're going to have a big corrective structure here. But why I did not buy this and I opted for GBP, CHF, and Euro CHF is because this is impulsive. This did not build up liquidity here, did not build up consolidation here. There was no enough build up that will launch this pair to the upside. So I was feeling that here is going to be too messy for me to go up. So that was why I left it. If you compare this with GBP CHF, for instance, can you see? Can you see GBP CHF? Can you see? Took this to the downside. Can you see? There was build up, enough build up, 3 waves up, 3 waves down, 3 waves down, break this low, we took it upside. There was enough build up here. That was why I considered this. And if you look at Euro CHF, guys, you see build up. Can you see? There's a build up. This build up ensure that this move to the upside is smooth. All right, it's very, very smooth. But in the case of CAD CHF, guys, look at it. The build up was inadequate, and I cannot rely on this build up to buy this market to the upside. Why? Why, guys? Because you will have this small build up and the market will throw down before it takes you to the upside. What happens when it throws you down? You are out of the trade. So I don't trade a reversal that does not have a WXY structure that I will be confident in taking. Okay, what do I mean by WXY structure? Look at it, guys. You have a market that threw down, and then you have 1, 2, 3. That's W. You now have the X that break the low here. Then you have the Y. That's the Y that you now take. This is usually very powerful, sharp, and strong in move. Powerful, sharp, and strong in move. And that's the wave I trade when I want to trade correction. So you can see, guys, let's go back to the chart. See, so you see, so this is how we plan the trade. Right now we want to buy, but right now we're having a corrective structure. A wave, B wave, we want the C wave. As soon as we get the C wave here, guys, we are going to be buying this pair, and it's going to be in line with fundamental. From our fundamental analysis, we are saying that we want to buy CAD against the CHF. Okay, but we are saying that because the value of CAD is heavily dependent on oil, and we are expecting oil to break down to form a complete corrective structure. So when that oil is breaking down, CAD value is going to be dropping, and that is when we want this wave to come. All right, and as soon as this wave is done, we want to resume the upside on CAD CHF, because remember, the interest rate for CAD is 1.5 and the interest rate for CHF is minus 0.7. And by the time this CAD drop here, this will be a massive discount that is given to you. All right, you have a double advantage at this level. Which one is advantage number one, guys? Advantage number one is that you are giving the currency you want to buy is very cheap for you. That's advantage number one. And the advantage number two is that you are given a higher interest rate. You are given a good interest, okay, for buying this currency. You are given a good interest for buying this currency. That will be advantage number 2. And even advantage number 2 that will give you a better confidence is that crude oil will have resumed upside at that level. And if crude oil resume upside, CAD is going to strengthen and it's going to reinforce your confidence in the buy of CAD CHF. So guys, you have seen how professionals are trading. You have seen it. This is what they are doing from beginning to the end that you are not doing. So I'm teaching you guys how to trade for the bank. I'm teaching you how to trade for the investors. The presentation I have given you in this video, if you go and replicate the same presentation in other pairs for your investors, they will know you know what you are doing. But if you are not able to analyze this currency from the perspective of the fundamental, using it to determine its direction, and coming to technical analysis, to look for a technical pattern, corrective structure, analyze and by doing top-down analysis and get a pattern and direction that reflect the direction of the fundamentals, then you have not started. Then it means that you are gambling. So as long as you remain with me on this channel, as long as you follow me on my group, on my trading group, I'm going to be showing you some of these secrets and some of these steps you're going to be following in order to trade like the professional. All right. So I've showed you what you do wrongly, guys, and why why you think forex is hard by not doing what you are supposed to do. And I'm showing you exactly how to approach the market by going through trading economics. That will x-ray the entire, fundamentals in the fundamental indicator of all currencies. And I can tell you guys, if you know your risk management and you know all these details I'm giving you, you are not going to be afraid of any news release, because whatever news that is going to be released is still going to be in tandem with existing news. All right, because some of these fundamentals, they play out for a long time. Can you see CAD CHF right at the bottom? All we need right now, guys, is a complete corrective structure in order to what? To place our trade. It's a complete corrective structure, guys. All we need is to be getting this corrective structure. This wave has gone, guys. We need a bigger corrective structure, guys, that will push us from 74 to 82. We need at least 500 pips for this trade. So that's it, guys. If you enjoy what I do, I want you to subscribe to this channel. All right, subscribe to this channel if you love this content, and pass your comments. I want to see your comment, guy, in the comment section. Just go there. If you love it, just say I love it. Just write I love it. I want to see I love it. If you don't like it, let me know you don't like it. All right, but I'm very sure you're going to like it, because nobody will hate what professionals are doing, guys. I'm just showing you the secrets of we professionals, what we do that you don't do, what we know that you don't know. I'm showing you here. All right, smash the like button, guys. Press notification bell if you are just subscribing. Make sure you press it so that when I release a cracking analysis like this, you're going to be getting it straight off. And make sure you share the videos to other people. I want YouTube to spread this good news. Let them see, let them spread these videos to other people who are feeling, who are not confident in their trade, and want them to watch this video and begin to do the analysis the proper way. All right, so that's it, guys. Till we meet again. Bye for now. Peace.